Good morning, ladies and gentlemen. How are you all doing today? So, to confirm that we are both on the same page, kindly type in hi in the comment section if you can hear my voice and you can see my screen clearly. Uh, Type in hi in the comment section so let's know we're on the same page before we kick the session started. Okay, Ashitaka, good morning to you. Carry, great day indeed. It's raining heavily here, very heavy. And the last 18 hours now I've been experiencing a very heavy downpour on this part of the world. Okay, Proto 54, hi, how are you? Hashitaka, good morning. Shahin 1849, good morning. Paisan, hello, how are you today? I trust we are all doing well and we are prepared for the new we're getting ourselves prepared for the New York session, which is going to be starting in the next couple of hours. All right, okay. I hope so. I hope so. Things are going on well at the moment, so I'm not seeing any issues right now. So let's see how it goes. And let's be positive. All right. Okay. Welcome again to yet another promising session of Experience Speed Life with my humble self, Sharif Daramola. It's time to fasten your seatbelts as I shall be taking you on a trading journey in the next 1 hour where we are going to be evaluating the charts using technical parameters such as patterns, market structures. We want to be identifying these structures and using these parameters to decipher trading opportunities lining up for us this New York session today. And in addition to that, we will be looking at the pairs we deliberated on yesterday. We want to see how well these pairs are doing, and if there are any adjustments, suggestions, or advice, I will be sharing them in due course during the course of the session. And also, if you have any pair you want us to look at, if you have any pair or commodity you want us to look at for this against the New York session today, feel free to drop it in the comment section. I will try as much as possible to include it in our schedule for today. So without further ado, let's dive into the chart and let's see what is happening. So as usual, the first pair we're going to be deliberating today is going to be the US oil. And on the US oil, what do we have here? So we have the US oil on the charts right now, and we've been on a bullish momentum since the beginning of the week. We've actually been holding a buy position after the breakout of the $92 level, which we identified on the higher time frame. And before I go further into the current structure we have here and the position we have here at this point in time, I think it's appropriate we take a look at the higher time frame to see how we got into the bullish expectation, especially for those who are not part of the session on Monday, Tuesday, and Wednesday. So what I will be doing at this point is to scale up into the daily time frame. I think the daily or weekly time frame, so that we can look at how we got into the current position we are in at this point. So now, if you look at what is happening on the weekly time frame, it is very obvious that price action has been on a strong bullish momentum in the last couple of years. And what I did here on the weekly time frame is to connect the series of higher lows which I'm highlighting on the screen right now. So after connecting the series of higher lows here, we were able to identify a resultant bullish trend line. And one thing we have noticed in the last couple of weeks, I think 3 to 4 weeks now, we have seen our price has continued to reject this bullish trend line at this point and giving us a clue into a possible bullish momentum that could be horizon from this area. So after identifying this bullish trend line, the next thing we did was to zoom into the structure and look at what has been happening since the beginning of the year. And when we look at what has been happening since the beginning of the year, we can see that we have a key level at around the 98, around the $85 area. And if we look at how that level has been a major determinant of price action in the past, we will notice that during the later part of last year, we saw how this level rejected price action as sellers took over the market from that point, and then we witnessed a breakout of that level at the beginning of the year, and price went to as far as the $130 level before we saw a retracement move back into that bullish trend line, which also shares a confluence with the key level at the $85 level. So our plan at the beginning of the week was to look out for possible bullish momentum, in the sense that price will probably respect that bullish trend line one more time to push price to the upside. That is the first scenario we're looking at. And then we also took into consideration a possibility that we could be having a breakdown of that bullish trend line or the key level to give us the signal of a bearish momentum. But since the beginning of the week, we haven't seen any clue that suggests that price is going to be going bearish from this point, as all the scenarios we saw on lower time frame supported a bullish potential opportunity on the US oil. So after we identified the structure on the higher time frame, the next thing we did was to scale down to the lower time frame, where we begin to see things more clearly. So when we scale down to the 4 hours time frame, the next thing I observed here on the 4 hours time frame is to identify this bearish trend line after connecting the series of higher lows. So after we connected the series of higher lows here, we identified this bearish trend line that has held price resisted by the sellers since the month of June, and we can see how this level has consistently been respected. But one thing happened here during the early days of this week. We saw a final breakout of that bearish trend line to give us that signal that we have been waiting for, showing us that that bearish trend line is no longer going to be strong enough to hold price action any longer. So immediately we identified that breakout of that bearish trend line here on the 4 hours time frame. The next thing I did was to identify the $92 level, and the reason why we identified that $92 level is just because of what we saw in the past. Here we saw how this level also has been a demand niche. We saw how that area has been respected. We saw selling opportunities at this point before the breakout, and then during the course of last week's trading session, we saw selling opportunities from that point. So we needed to be very sure that this bullish momentum is going to hold, despite the fact we saw that breakout of that bearish trend line. Remember, we've been bearish since the month of June, and for us to be saying that, okay, we are looking for bullish potential here, we need to be very, very sure that price is actually going bullish. So what I said here is this: we want to see how price is going to relate with the $92 level in such a way that if we see a reversal pattern from this point, then we'll be thinking that the bearish trend line, that the breakout of that bearish trend line could probably be a false one, and price could be going to the downside from there. But if we see a breakout of that $92 level, then we are going to be thinking of bullish momentum from that point onward. So the next thing we did was to identify the $92 level, and we scaled down to a much lower time frame, like the 1 hour time frame. So on the 1 hour time frame, we've now moved into an area where we begin to see that we have a structure lining up for us in the form of a bullish trend line. After connecting the series of higher lows here, we were able to see that we are having a structure already that's probably going to be guiding a bullish momentum in the future. So as soon as we saw the breakout of the structure, that is the $92 level here, we joined the rally. And I think on Tuesday or Wednesday, I shared with you this consolidation phase here. We saw the breakout of that structure, and I told you that a retest of that structure should give us a confirmation to join the trend continuation to the upside. And lo and behold, we had like multiple rejection of that level, giving us multiple entries at that point, and price continued to the upside from here. So we were around this point during yesterday's trading session. That is, we saw how this area at the $95-96 area has been rejecting price action by the sellers, and we said, okay, fine, since we have that kind of scenario there, then it's very likely that we could be experiencing a bearish momentum. So what I said at that point is that we want to be patient, especially for those who are yet to join that bullish momentum we've been enjoying since the beginning of the week, that we should be patient to wait for price action to come back in the form of a retest of that structure that was broken earlier in the week. Remember, I told you we had the breakout of the structure here, we had a retest of the structure here, and it's there. And I told you yesterday that there is a likelihood that price could either come back into the structure around this point or the $92 level, where we want to be looking forward to reversal patterns that will support a trend continuation to the upside. So now that we said that yesterday, what has been happening in the last 24 hours? Now we can see that we have price doing a sharp rejection of that structure that was broken a couple of days ago. We saw the sharp rejection here. I think this is going to be the second rejection after we saw the first one around this point. So now, since we are on a bullish potential, we are on bullish perspective on the US oil, and looking at the bullish trend line we were able to identify here on the 1 hour time frame, as long as price is rolling right above that bullish trend line, we should be comfortable in our bullish momentum. So right now, what do we have here, and how do we intend taking advantage of a potential opportunity this New York session today? Before I go further here, it is appropriate I made mention here that we should also take into consideration of the fact that today is the last trading day of the week, remember, and we want to be very, very mindful on how we hop into any trade today, because most of the time, something that is peculiar with Fridays is that participants in the market who have taken advantage of a bullish momentum since the beginning of the week will likely want to be doing quick sales with the intention of taking some profits before the week closes. So I think that is why we've been seeing this retracement move to the downside around this area, implying that participants are actually doing a quick sell on this one. So for those who are not in this trade at this point, and then you're looking to take advantage of a trend continuation, what do we want to be looking forward to during the New York session today? Now, what we have here in the last 24 hours, we have the sharp rejection of that buy zone, which was identified at the $92 level, and then we have seen price finding new highs and new higher lows. Now, with this current structure here, and how do we intend moving, taking advantage of that move? So one thing I want to be doing here is to scale down to the 15 minutes time frame, where I want to see what is happening within this consolidation phase that began in the later part of the New York session yesterday. So we want to identify this consolidation phase. Let's see what's happening here and what could be the possible direction from this point. So one thing we want to do here is to bring out our line charts, and let's connect and find out how this level has been holding price action. So the first thing we want to do here is to connect this level. So we have something that looks like a bullish trend line. I want to make this a little bit, it's not, so we have this one here, and then we have something like this here too as well. So we have something that looks like a ascending channel. Price is caught with the neck consolidation phase since the later part of the New York session yesterday, giving us a clue into the indecision that has gripped the market at this point. So now that we have this setup here now, what we want to be doing is to look out for breakout of the structure to give us a signal of where price is heading. So we could have a possible breakdown of the structure, that is, price breaks down this channel, a retest of that channel, moving back to the downside. That's one scenario we want to be looking at this morning. And the other scenario is if we are going to be having a break above of the structure, giving us a signal of a bullish momentum after a retest of structure happens. So these are the things we want to be looking forward to. But one thing I want to say here is that we all understand that we've been on a bullish momentum since the beginning of the week. So we want to be looking for buying opportunity here, not selling opportunities. So even if we have a breakdown of this channel here, I'm still thinking that price is likely breaking the channel to probably do a retest of that bullish trend line, which we identified on the 1 hour time frame, or probably move as far as into the buy zone here, where we want to be looking for reversal pattern right around the $92 level, which we identified on Monday, and the breakout of that structure should give us a confirmation to join the rally to the upside. So that's one scenario we want to be looking forward to. So what I'm saying here simply is, if we do have a breakdown of this channel, well, I don't want to be selling, considering that we've been on a bullish momentum since the beginning of the week. So I want to see price do a retest, come back into somewhere around the level at $92 level, which we identified on Monday, which also shares a confluence with the buy zone, which we identify here, and then a reversal pattern on lower time frame to give us that confirmation to go to the upside. So that's one scenario we want to be looking forward to. Then the other scenario is that we look out for a breakout of this channel in the form of a breakout to the upside here, and that will give us a signal. Remember, we are not getting too excited at the sight of a signal. We want to wait for price action to give us further confirmation in the form of a retest of structure. Then we can join the rally to the upside from there. So this is how we intend taking advantage of the bullish momentum. So whatever opportunity comes up during the New York session today, we want to be on standby to take advantage of that move. Now, that being said, the other thing I want to put here to make our job easier is to look forward to, that is, if we see a breakout of that structure to the upside, I want to be identifying a level that will be our guide for the week. So what we want to be looking forward to here, so I've identified a level right around the $93.70 area. So let me label this area for the sake of clarity, so that we don't get things mixed up when we are about taking advantage of that bullish momentum. So we have a $93.70 level here, and the reason why I have had this level here is simply because it's simply this. If we look into the left, we can see how this level has held price supported. We saw how this led price supported before the breakdown happened. Then we had a rejection around this area. We had a rejection around this area by the sellers as well. So if we are going to be buying this US oil, we want to see the actual breakout of that structure. That is, if we are having a breakout of that channel, we want to see an outright breakout of that structure, giving us a clue of a bullish potential. Then a retest of that level of somewhere around here will give us further confirmation to join the rally to the upside. So what this simply means around the $93.70 level is that if we are in a buy position on this one, anywhere right above the $93.70 level is a very, very comfortable zone to be in a buy position on the US oil. So this is the scenario we want to be looking forward to on the US oil today. So let's get ourselves prepared and be on standby to take advantage of that move. That is for those who are not in this trade yet. So if you have any question whatsoever regarding what I have just discussed so far, feel free to drop a word or two in the comment section to inquire further, and I am willing to be of help in that regard. So that is that on the on the on the US oil. So I'll be taking the next 10 to 15 seconds to read through the chart to see if there are any questions regarding what I have just discussed, and if there are none, then we just move on to the next pair. So what do we have in the chart? Oh, Ramona 85, good morning to you. Nina, thank you. Okay. Okay, in the absence of no questions, let's move on to the next pair. So the next pair we are going to be looking at is the US tech. So on the US tech, we actually have been enjoying a very strong bearish momentum since last week trading session. Remember, we were able to take over 700 pips since last week. We took that move right from this point at the 13,000. Let me make this clearer. Around the 13,500 level, we took it right into this point. And one thing we are seeing here is that a possible bearish momentum still very possible on the US tech. And if we look at the structure we have here on the daily time frame, we can see that price has been trending on the downside. We have consistently find higher lower highs and lower lows at this point in the market. And if we look at what has been happening since March, we saw this impulsive move that took price all the way from there into the 11,000 level, and I'm seeing this move as a retracement of that impulsive move where price comes back into the area around the bearish trend line here, and I'm thinking that the reversal pattern here is probably going to project price to the downside one more time, hereby respecting that bearish trend line again. So that was what we are looking forward to during the early days of the week. So what we identify here, we scale down to the 4 hours time frame, and what we observed on the 4 hours time frame is this. We saw the breakdown of this bullish trend line here. We saw the breakdown around this point here, and that gave us a confirmation that this pair will be going to the downside as it no longer respects that bearish trend line. We thought that price is going to respect this trend line before, that is climbing to the upside from this point, but we never saw that. We saw a breakdown of that trend line, giving us a clue into the strength of the sellers at this point in the market. So what we did since the beginning of the week is that we noticed that we noticed the consolidation phase right between the 13,200 level and the 13,150 level. We saw a consolidation phase before the breakdown of that area happened. So since the beginning of the week, that is from the 13,150 level, price has been trending to the lower side. So we saw this move to the downside. We took some profit and we identified this $12,830 level, which has held price supported for I think around 24 hours before we saw the breakout of that structure to give us that price is probably going through a retracement phase of that impulse leg. So during the course of yesterday, we identified the $13,000 level where I told you that let's see how price is going to relate with this bearish trend line here. That are we going to be seeing a double top structure that will be sending price to the downside. And if we don't see a double top structure sending price to the downside, we want to be looking forward to if price breaks out of that area, we want to be looking forward to the 13,150 area, which is the area where price started this week. We want to be looking forward to that area for selling opportunities from that point. So if we scale down to the 1 hour time frame, let's see how price has reacted to this level, that is the 13,150 level. Let's see how price has reacted to that level. So we scale down to the 1 hour time frame, and what do we have here on the 1 hour time frame? So on the 1 hour time frame, the first thing I noticed on the 1 hour time frame is that since close to the end of the New York session yesterday, we begin to see multiple rejection of this area, which led into the early hours of this morning. We saw multiple rejection of that 13,150 level to give us a signal that the sellers are probably back into the market. So right now, with that structure identified there, definitely we want to be selling the US tech. So right now, personally, I'm already in this trade with about 90 pips running in profit at this point in time. And for those who have taken advantage of that move from that point, kudos to you to have been on standby in that regard. Hold on a second, please. Trying to hold on a second. So what I did this morning was this. Let me show you what I did this morning. What I did this morning was to scale down to the 15 minutes time frame here on the US tech. Let's delete this. It's no longer needed. We don't need this anymore. We don't need this anymore as well, so that we can have a clean slate. So let me shift this here a little bit. So what I saw here, right under the $13,150 level, is a channel. We saw our price moved into this area. We saw our multiple rejection of the zone continue to trend towards the downside, giving us a clue into the strength of the sellers at this point. So what I did here is to identify this channel, bringing out my line chart, and then connected this low to find a support level here at the 13,120. Let's label it for the sake of clarity. So we had this level here, and this is what we saw here. So we saw the breakdown of that level after the consolidation phase happened. We saw the breakdown of that level, giving us a signal that the bearish momentum is solid. Then we wait for confirmation in the form of a retest of that structure at 13,120. And what did we see afterwards? We saw this bearish engulfing candle taking price out of that area, right into this current structure we have at this point. So if you took advantage of this move, kudos to you. And for those who are yet to take advantage of this move, what are we going to be looking forward to during the New York session today? Well, with the current structure we have here on the 15 minutes time frame and looking at what we have in the past, bringing out my line chart, I can see that we have a structure here as well, which we could probably wait for price action to come back into, which is around the 13,100 area. Hold on, let's give this a label, $13,100 level. So let's see if price is going to come back into this level. That is, we see if price is going to come back into this level, which also shares a confluence with that bearish trend line. Then we look out for patterns on lower time frame to join the decline to the downside. So this is the scenario I'm looking forward to on the US tech. The US tech is very, very bearish. It's looking very, very bearish at this point in time. So you might want to be ready to take advantage of that move to the downside. And where will our take profit target be? Remember, during the early days of this week, I was able to identify a take profit target zone right between the 12,900 area and the 12,400 level. So within this area is most appropriate to place your take profit target. You could use the demand zone here. You could use the 12,900, or you could continue to extend your TP as price continue to consume all these levels. So if price gets into the 13,000 area, you want to extend your TP level to somewhere around the 12,700, and if price gets into the 12,900, you might want to extend your TP into the 12,600, and if price gets into 12,800, you can extend your TP to 12,500, just like that, as you continue to extend it further and further if price continue to move in the direction we have projected here on the US tech. Now, in addition to what I've just explained to you so far on the US tech, there's also one thing I observed here which I want to share with you, and that is if we bring out our line chart here and look at the structure we have here in the last couple of days, we can see that we have a bullish trend line that we can connect. After connecting the series of higher lows, we have a bullish trend line that has been guiding price action. And with that bullish trend line, what we want to be looking forward to at this point is a further breakdown of that bullish trend line to give us further confirmation that the bearish momentum is very, very strong. So right now, what did you see here? We can see that in the last 2 hours, we saw the breakdown of that bullish trend line here. And that's also a signal that what we are talking about here appears to be valid. Now, when we see this, like I said, you want to wait for price to come back and do a retest of that 13,100 level, or probably that bullish trend line. Then you want to be joining the decline to the downside from that point. So we are still on the same page here. If you are still bearish, I think we are good to go on this one. So take profit target, like I said, continue to extend it as price continue to move in our direction. So that's that on the US tech. If you have any questions, feel free to drop it in the comment section, and let's come here to relate with that. Okay, so if you have any question, feel free to drop it in the comment section, and I will be willing to be of help. So let's move on to the next pair before I think we have like 30 more minutes left. So let's move on to the next pair. The next pair we deliberated on yesterday was the AUDUSD, and on the AUDUSD we're still expecting that bullish momentum to hold. And let me share with you how we got to this point. Now, if we go to the 4 hours time frame, what did we see on the 4 hours time frame? Sorry, on the daily time frame rather. So on the daily time frame, it's obvious that price has been bearish since the month of April. We've had series of lower highs. We can see how we connected the series of lower highs, and something interesting happened during the later part of July stroke the month of August, as we saw breakout and multiple rejection of that bearish trend line, giving us a clue into the possible strength of the bias at this point, as we can see that the strong breakout, hold on a second, let me share this with you. The strong breakout of that bearish trend line gave us a clue into the strength of the bias, and at the same time telling us that the bearish trend line is no longer strong enough to hold selling momentum. As when we expect this, when we saw this, definitely from a technical perspective, we expect that whenever we see price break out of a structure, we expect that price should come back and do a retest of that structure. And what did we see here? We saw that price came back into the bearish trend line, do multiple rejection of that level, and we've been seeing bullish momentum on the AUDUSD since the beginning of the week. Now that we have identified the structures here, we scale down to the 4 hours time frame, where we want to look out for more confirmation that will support that bullish momentum. And what do we have here on the 4 hours time frame? When we scale down to the 4 hours time frame, the next thing we observe that is that the 0.6900 level has been a very strong demand zone since the later part of last month's trading session. We saw how this level where we saw how buyers have gathered at this level to push price to the upside from this point. We saw one happening here between the 20th and 21st of July, and then we saw another one happen between the 3rd and 5th of August this year. And during the early days of this week, we saw multiple rejection of this area, giving us a clue into the strength of the buyers at this point. As we can see, sellers were trying to push price to the downside from here, but the strength, the momentum was not strong enough to push price below this demand zone. So what did we see? We saw a significant breakout of that level. So I will be scaling down to the 1 hour time frame, where I want to show you what we saw on the 1 hour time frame. So when we scale down to the 1 hour time frame, the next thing we observed here was that before we observe that, we identify this 0.6900 level as a key level we want to be using to guide our action for this week. And what we saw here on Tuesday, Monday stroke Tuesday, we saw this move to the upside. We saw the signal. Remember, we didn't get too excited at the sight of the signal. We waited for confirmation, and the confirmation came in form of a retest of the 0.6900 level, where I also identify a buy zone, where we said I told you to look out for buying opportunity from this area. And lo and behold, that actually happened. We saw breakout retest of structure within this area, and we saw this move to the upside. So currently on the AUDUSD, we are in profit, and we are running with about over 80 pips and close to 90 pips in profit right now on the AUDUSD. And the next thing I told you yesterday was that to protect our position against any sudden selling momentum that could push price to the downside, I advise that we move our stop loss to somewhere right below the 0.69500 area, which is somewhere around here, and price action has been trending to the upside from this point. Then for those who are not in that trade yesterday, you remember what I told you? I told you we were around this point yesterday, that is around this area. During the course of yesterday, we were around this area during the course of yesterday, and I told you that if you are not in this trade, we have another opportunity to take advantage of that bullish momentum if we see price come back into the 0.69500 area with multiple rejection of that level. And actually that happened. We saw double bottom structure around here pushing price to the upside. So if you are taking that move, kudos to you. You must have been in about how many pips in profit at this point? About 30 pips in profit at this point. So if you are still in this trade, I hope your stop loss is still right below the 0.69500, because this is a very significant level that has held price resisted in the past. It has been a selling niche for participants in the past, and right now it appears to be a demand zone. So what I want to be saying is maintain your stop loss right below that level, and let's see how price is going to relate with the 0.69900 area. So that is this area here. We have been seeing selling niche from this point. Price has continued to be rejected from this area by the sellers. So what I want to be looking forward to in the New York session today is, hold on a second, let me delete this so that let me delete this. So what I want to be looking forward to in the New York session today is an outright breakout of this level, that is the 0.69900 area. If price breaks out of that area and comes back to do a retest of that level, then I want to be looking for patterns that will support a trend continuation from that point to add more position to my existing trade. So let's see how price is going to play out from here. And remember, we have this bullish trend line that has been holding price action since the beginning of the week. We want to be seeing price right above that level. So what I'll be saying here is this: if price breaks out of the 0.6990 level, that is, we see a breakout of that structure, we want to be moving our stop loss right above the 0.69500 area to lock in some profits and move our position in such a way that we don't get into a losing position. So we move our stop loss above the 0.69500 area as soon as price breaks out of the 0.69900 level. So where's our take profit target on the AUDUSD? Well, we already aimed at somewhere between the 0.71 and the 0.715 area. And the reason why we have chosen that area as our take profit target is simply because of what we have here in the left. So if we look left, we can see that we have an area here where it has been a selling niche in the past, and what we want to be looking forward to today is that price should come into that area, because we want to see how price is going to relate with that level. Are we going to be having multiple rejections again that will send price going to the downside from there, or are we going to be witnessing an outright breakout of that structure, which might probably give us a confirmation of a trend continuation to the upside? So we don't want to be too over ambitious on the AUDUSD, so our take profit target still remains around the 0.71 area and the 0.71500 area, which will dovetail to somewhere around 200 pips. I think we saw that yesterday. Let me do that again. We have around 200, 250, 230 pips to catch here if price continue into that zone. So that is that on the AUDUSD. If you have any questions whatsoever, feel free to drop it in the comment section. I'll take my time to always check through the comment section to see if there are any questions in that regard. So now moving on, we moved on to the which pair is that, the USDJPY, where we were actually expecting a selling momentum here on the USDJPY. That is on a short term. Actually, on a long term perspective, we were looking at a bullish momentum. Let me show you what we are talking about here. And if we go to the daily time frame, this is what we have here on the daily time frame. On the daily time frame, price has been on a strong bullish momentum drive. And one thing interesting happened during the early days of this month. We saw our price came back after hitting the highest peak at $140 area. Price came back to as far as the 130 Japanese yen level to reject that level sharply. Then we saw our price action transposed into what looks like a double bottom structure, which from a technical perspective is a very, very strong reversal pattern. So with the sight of this double bottom structure here, we saw a breakout of that neckline at the 135 Japanese yen area, giving us a confirmation that we have a mature reversal pattern. So what we have been waiting for since the beginning of the week was that price should come back and do a retest of this neckline around the 135 Japanese yen to give us the confirmation of the long-term bullish momentum we were looking for. So this is what we've been waiting for since the beginning of the week. And like I said, if we are waiting for price to come back down into this area, then definitely we should be looking forward to selling momentum from this place, which is going to be a counter trend opportunity, after which we look for that pattern to join the rally. So I said, for those who are counter trend traders or probably short-term traders as well, you might want to take advantage of that bearish momentum from the zone here. But if you're a long-term trader, you want to wait for that bullish momentum to happen right at this bus stop here at the neckline area, which also shared a confluence with the bullish trend line we identified here on the daily time frame. So after this identification here on the daily time frame, we scaled down to the 1 hour time frame, where I said let's look out for our counter trade opportunities for those who intend doing selling momentum here on the USDJPY. Now on the 1 hour time frame, what we observe here on the 1 hour time frame is that price has been trending around this 137.5 area, and the 136.800 area since the beginning of the week. We can see how this area has held price resisted. Price has been unable to break above the zone, so giving us a clue into the possible selling bias that is happening within this area. So the thing I did here was to connect the series of lower highs here. After connecting these points together, we had this resultant bearish trend line, and we were able to connect this bearish trend line to give us that that yardstick for bearish momentum for the week. But one interesting thing happened during the early hours of today. We saw an outright breakout of that bearish trend line. So is that going to be a breakout signal that price is going bullish? That is a question we want to be looking at the session. So right now, since we saw the breakout of that structure, that is, we saw the breakout of that bearish trend line here, is price going to come back and do a retest of this level at 136.750 area to push price to the upside? That is a question we want to know. So if you had already taken the selling opportunity here, definitely you will be in a loss of about how many pips right now? About 10 pips, 13 pips right now. But for me at this point, it's still not yet. I'm still not yet worried about a sudden bullish momentum coming here, because I'm still seeing this as probably going to be a false breakout. That is, this breakout here is probably going to be a false breakout unless we see price do an outright engulfing candle, taking us out of the 137.500 area. Another thing I also looked at here is that if we look at the current structure around this point, we saw a higher low here, and a higher low here. If we connect that series together, we have a resultant bullish trend line. And one thing you will see here is that price has rejected this bullish trend line once. We saw the second rejection here, so we might be looking forward to a second or third rejection that will be sending price to the downside from this point. So the counter trend opportunity still appears to be holding based on the current structure here. But one thing I want to state here, that it's safer to be in a selling position below the 136.750 area, considering the current structure we have here. Look at what we have in the left. We can see we have this demand niche, then we have multiple rejection by the sellers at this point. We had another one here, we had another one here. So because of this, I want to be seeing price right below the 136.750 to be comfortable in a selling position on the USDJPY. So like I said, on the daily time frame, we are still waiting for price to come back into the 135 area, which is the neckline of the reversal pattern we identified on the daily time frame, where we want to be looking for buying opportunity from there. However, if during the New York session today we see outright breakout of the structure, remember, we are not getting too excited at the sight of that signal, because we want to wait for confirmation, which is likely going to come in form of a retest of that bearish trend line, or probably the 136.750 level, after we should look out for patterns on lower time frame that supports a trend continuation to the upside. So this is what I'm looking forward to. I'm still expecting that bearish momentum anyway to happen, but I'll let you know that it is appropriate that we stay below the 136.750 for any selling momentum here on the USDJPY. So if we are selling, we still have about between 150 to 170 pips to catch here. So let's see how price action plays out in the next couple of hours, then we can make our decision. So selling momentum still holds right below the 136.750, and let's see what happens during the New York session today. So let's move on. Now we moved on to the XAUUSD, that is the gold, and on the gold we've been seeing bearish momentum happening on the gold. Let's see what we're talking about. Let's scale up to the daily time frame and let's see what our expectations were prior to the beginning of this week. Well, if we look at the weekly time frame on the gold, we can see that we are on a long-term bullish momentum. This has lasted for over 6 to 5 years now, and I was able to also identify this temporary bullish trend line here, which I can see, you can see from the current structure we have here. We've been seeing multiple rejection of that bullish trend line in the last couple of weeks, giving us a clue into a possible bullish momentum. But something interesting occurred when we scaled down to the daily time frame. We observe that we have a bearish trend line that has been holding price action resisted by the sellers since the month of March. So we were able to connect the series of higher lower highs. Here we saw the first high, we saw this area, and price came to that area again around the key level which we identified at the $1,800 level, and since then price has been trending to the lower side. So now when we scale down to, okay, hold on a second, let me show you something. So now that we have that scenario here, so we scale down to the 1 hour time frame where we begin to see things very clearly. Look at what we have here on the 1 hour time frame. We actually identified this bullish trend line yesterday. Remember, we identified this bullish trend line and we saw our price has continued to respect that bullish trend line one way or the other. Though we had a breakdown here, then we had reversal patterns that took price out of that structure, and as soon as we had the breakout of that structure, price has continued to respect that bullish trend line since in the last couple of weeks. We can see how that has been holding price action. And one thing interestingly happened during the early hours of today. We saw a breakout of that level of that bullish trend line, and that bullish trend line, we also have a level there which is around the $1,754 level. You can see how that area has shared a confluence with the bullish trend line here. Hold on a second. Okay, sorry for that. So we have this. We witnessed this breakdown of this 1,754 level during the early hours of today. So what are we looking forward to now? We saw the breakdown, retest of that level. Let me show you what happened on the 5 minutes time frame. We saw the breakdown and multiple retest of that level on lower time frame. So we joined. So I joined right here after we saw the breakdown. Hold on a second. We saw the breakdown with multiple rejection of that level, then joined the decline to the downside. So right now, if you are joined right from this multiple rejection, kudos to you to have identified that, because right now you'll be running with about 600 pips. But if you are not yet in this trade, this is what we want to be looking forward to during the New York session. I'll show you in a moment. So let's see what we'll be waiting for. Now that price is right back to where it started this week, we can see that price is right back below the $1,748 level, which is the area where it started this week. So what we want to be looking forward to is this. We want to be looking forward to price come back to do a retest of this area one more time at the 1,754 area, or it could be this bullish trend line here. Then we look out for patterns on lower time frame that supports trend continuation to the downside. Then we can join the decline to the downside from there. So if that happens, where will our take profit target be? Well, in the meantime, considering that today is Friday, the last trading day of the week, we want to be very mindful. And what we want to do is to look at the previous structure and look at that area as our take profit target zone. And if we look left, we can see that between the $1,740 and the $1,730 seems most appropriate to be placing our take profit. And if that's going to be happening, then we have between a 1,400 and about a maximum of over 2,000 to catch here as price action is being monitored. So this is the scenario we're looking forward to here on the XAUUSD. So let's see how price action is going to play out during the New York session as we get ourselves prepared. So that is that on the XAUUSD. Then we went on to talk about the excuse me, let's look at what that is. Hold on a second. We looked at EURUSD, and now on the EURUSD we've been expecting a bearish momentum on the EURUSD. Remember, on the 4 hours time frame on the EURUSD, we identified this this descending channel which has been holding price action since on the 10th of August. Price has consistently respected this level in the form of lower lows and lower heights, and we saw a breakdown of that descending channel during the early hours of this week. We saw the breakdown of that descending channel, and we were actually looking forward to a retest of that trend line of this area to join the decline, but that did not happen as price continued to flow to the upside. So now the a level was identified at the $1 level yesterday, where I told you that we should be looking for multiple rejection of this level to join the decline. So right now, what do we have here? We have price right back at that area. So one thing I want to be stating here is this: since we already have a breakout of this the resistant level of the descending channel, are we going to be seeing an outright breakout of this level to push price to the upside, or is this likely going to be a false breakout? Well, one thing I want to say here is this: considering the fact that the EURUSD has been on a very strong bearish momentum since the beginning of the week, in fact even further than that, since in the last 2 weeks on this one, we've been having a bearish momentum here. I want to be advising that we consider taking selling opportunities here. So one thing I did here to make our job easier is to maintain this 1.000 level, as we want to see price action right below that level. So if price action goes down below this level, you want to be selling the EURUSD. So, and if we have a further breakdown, a retest of structure, then we could be looking for pattern on lower time frame to add more position to this trade. Our take profit target still remains between the 0.98500 area. So let's still hope that price moves as expected, which will be dovetailing to over 150 pips in that regard. So expectation on the EURUSD still remains very bearish here. So one thing I will be saying here, there is a caveat here which I would like to state here before I go. If we look at the structure we have here, if price continues to the downside and we see something like a rejection of the 0.99500 area, we see multiple rejection of this area, I will be advising that we move our stop loss to break even, as we never can tell. This could be a confirmation of a reversal structure that is likely going to push price to the upside. So this is the scenario we're looking forward to on the EURUSD. We still maintain a bearish momentum, and let's see how price will go further in the New York session. So on this note, I would like to say this is the last pair we'll be talking about. But for those who are not part of the session since we began today, let me quickly do a quick recap of what we talked about so far. So the first pair we deliberated on today was the US oil, and on the US oil, we are still expecting that bullish momentum to happen. And what did we do here on the US oil? We scaled down to the 15 minutes time frame, where we were able to identify the structure that this consolidation phase has transposed to in the last 24 hours. So after doing that, we were able to identify an ascending channel where we can see our price has continued to respect this channel. We can see this consolidation phase here. Price has continued to respect this channel, and what I told you during this session today is that we want to anticipate a breakout or breakdown of that level of this channel to give us the signal we are looking forward to. So the first scenario I stated was that if we haven't breakdown of the channel, then a retest which should give us a confirmation that a selling momentum is valid. But one thing I say here is that I'm not going to be selling the US oil considering the bullish momentum that began this week. So this move could likely be an intention of coming back to respect this bullish trend line or this $92 level, which was broken during the early days of this week, or probably come into this buy zone area to look for buying opportunity to push price to the upside. That is the first scenario I shared here. And the second scenario is that we could be having an outright breakout of the $93.70. That is, price breaks out of this area, does a retest of this $93.70 level, then we see patterns on lower time frame that will support a trend continuation to the upside. So these are the two scenarios we are looking forward to on the US oil today. And where will our take profit target be? Well, from the structures we had on the daily time frame, we have identified between the $105 area and the $115 area as our take profit target zone, which is not likely to happen today, but on a long-term perspective, that is what we are looking forward to. But if you, since today is Friday, well, we could take our profit as soon as price gets to around the $95.50 area for this week, or if you keen on holding your position till next week, then it's okay. So we should be having around 150 to 200 pips to catch here for today if price moves in that direction. Then on the US tech, we're still holding a bearish momentum here on the US tech as price has continued to respect this continue to move to the downside. Remember, we were able to take this move last week. We took about 700 pips move from this one, and right now the situation we have here still continues to support a trend continuation. So what I showed you here today was that we saw this consolidation phase right around the $13,120 level, when we saw the breakdown retest of the structure during the early hours of today, giving us further confirmation of a bearish continuation to the downside. So this is what we have here on the US tech, and for those who are taking advantage of that move, I gave you a kudos for identifying that move. And for those who are yet to be in the trade, I told you that okay, fine, if you had missed that opportunity, we want to be waiting for price to come back and do a retest of the 13,100 area, where we want to be looking for reversal patterns on lower time frame to join the decline to the downside. So with our take profit target still sitting right between the 12,900 and the 12,600 area, I told you, hold on a second, let's go to the 1 hour time frame where I shared a scenario. I shared a trading setup with you where I said if price continue to move in our direction, for now, you can place your take profit target around the 12,900 area, and if price continues to move in our direction, you can extend your TP to 12,800. If price gets to $12,900 area, you could extend your TP further and further as we guide price action to the final destination. Then we went on to talk about the AUDUSD, where we took advantage of a bullish momentum here, and the first thing I said is to move your stop loss right now to protect your position right below the 0.69500 area. And one thing I said here as we head into the New York session is to wait for possibility of a breakout of the structure at the 0.69990 area. If we have a breakout of that structure, you want to be moving your stop loss right above the 0.69500, and if we have a retest of this level with patterns on lower time frame that supports a trend continuation, you want to add more position to your trade. So that is that on the AUD USD. Then we went on to talk about the USDJPY, where I told you I'm still expecting this counter trend opportunity to happen, and I told you that if you are a long-term trader, you want to be waiting for price to come back into this 135 level, and then look for bullish momentum to join the rally to the upside. And if you are a counter trend trader and you want to take that move to the downside, you can be looking for somewhere right below the 13,000, the 130 136.750 area. Below this area as an area, you want to be looking for selling opportunities on the USDJPY. Then we went on to talk about the gold, where we already saw the signal we are looking forward to for a selling momentum, as we saw a breakdown of the bullish trend line, which also shares a confluence with a level that's at 1754. And for those who had actually missed this move, I told you to wait to see how price is going to relate with this level. Is there a likelihood that price will come back into the $1,754 level, where we want to be looking for patterns on lower time frame that will support a trend continuation to the downside. So that is that on the gold. So let's wait and see. If you had missed this move, let's wait and see if price is going to come back into this level so that we can take advantage of that move. Then we closed the day with the Euro USD, where I told you I'm still expecting the selling momentum here on the Euro USD, and we took into consideration this descending channel and the fact that price has been bearish for a very long time on the Euro USD. Well, we have a breakout of the channel here, but I'm still thinking that this might likely be a breakout, a false breakout. So to be on the safer side, I have told you that we should maintain a bearish momentum if price comes below the 1.000 level. If price comes below this level, then we should be taking advantage of a selling momentum here, and we had more position at a breakdown retest of the structure to the downside. However, there is a caveat here. Remember, I told you that if price comes to this point and we start seeing multiple rejection of the 0.99500 level, then we should be considering the possibility that this could be a pattern that want to likely push price to the upside. So what we want to be doing once we sight such a situation, we want to be moving our stop loss to break even, so to lock in our position so that we don't get caught up in an unnecessary losing position at this point. So this is what we explained today on the Euro USD. I was able to give you clarity on 6 major pairs that we should be looking forward to during the New York session today. So thank you guys for being around. I really appreciate every moment with you guys, and hoping to see you on we are going, it's Monday, so hoping to see you Monday. So I wish you a wonderful weekend and best of luck during the New York session today. And on this note, have a wonderful weekend, and bye bye.